in terms of intervention? So you have an expectation that if we were to see it over 155, is that your expectation that they'd move?
I think judging from historical intervention episodes, they never really come in at exactly the same level, right? And in terms of the intensity of verbal intervention, frankly speaking, it's been 5.5 for like 3-4 weeks already. So it's really just any time now.
But realistically, what would be, I suppose, the ability of them to intervene substantively, considering that, if we're going to run on the expectation that the Fed perhaps one cut, maybe no cuts, and what that will do to the long end of the curve, and I suppose what's being priced in versus what every other central bank is doing, what can they realistically achieve unless they let their rates run?
Well, I mean, look, there are a couple of things. One is that the Fed's repricing has been very dramatic. But right now, the market's only expecting 30, 35 basis points of rate cuts for the rest of this year. I would say that this is already quite, maybe it's almost run its course in the near term, right? So there's, again, this window of opportunity from that perspective. The other thing is to think about the short positioning in the market right now. There is short yen, right? So if there is a bit of volatility in dollar yen, we could get a bit of a short squeeze, quite a powerful short squeeze.
Yeah, but in terms of, okay, you get the short squeeze, much like we've seen in other interventions in the past, or even if we're seeing, if we're talking about a short position anywhere, if we're talking about, a basis trade, if we're talking treasuries, if we're talking about equities, that it's almost an aberrant moment, but it's not then reflective of, the fundamental conditions. So you could clean out the speculators, but that doesn't necessarily equate to more speculation not coming back in. So do you think that there's a possibility that they engage in, whether it be hiking rates, whether it be, tapering down the purchases?
So yeah, it's true that maybe it comes back down to monetary policy divergence with the Fed. So for example, if what we mentioned earlier about the Fed repricing being, at the moment a lot of it has been done. So that's one thing. Then on the Japanese side, perhaps if the Bank of Japan actually sounds more open to considering further rate actions for the rest of this year, that could also be a bit of a surprise to the market.
Can I ask you, because we're having a pretty wide and open conversation when it comes to all of this in terms of expectations at the very least, it almost seemed like there was a suggestion that there could be some coordination on the front of Japan and Korea, and the hope that perhaps the US could participate. Is that realistic, though, in terms of the US assisting, whether it be, Plaza Accord 2.0 or anything like that? Is that a realistic notion?
Honestly, we haven't seen this kind of coordinated intervention in a long time, right? It's quite, I would say, unusual in today's modern FX markets, especially for a floating exchange rate regime like dollar yen and also dollar Korea. So I think that is probably, a tail risk scenario only in exceptional circumstances. And right now, I'm not sure we're in exceptional circumstances, right?
Just in 20 seconds or less, or 30 seconds, are you then, based on everything that we're discussing, going long yen right now?
No. Yeah. So we are not. We don't have a position right now. We don't advocate a position. It would be very brave to go long dollar yen at this juncture. But as you mentioned, the fundamentals are still not exactly screaming for a short dollar yen either.